Alright, let's go everybody. Tuesday. Yesterday sent out my new issue of MMT Trader. If you want to get a copy of that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. By the way, one announcement. As of March 1st, the subscription rate will be going up to $250 per month. It is currently at $195. So if you want to lock in that rate, get your 30-day free trial now and you will lock in that rate. March 1st goes up to $250 a month. I have some people who signed up at the very beginning for $75 a month. People signed up for $100. People signed up for $125. People signed up for $145. Each time they thought, oh, they were paying a lot. Then there's people signed up for $195. Now it's going up to $250. Remember, I'm the only one who does this. I'm the only one who has an applied approach to MMT. I have taken the concepts of MMT and combined that with my 40 years of trading experience. A floor trader on 4 different exchanges, managed money for a major international bank and for a major hedge fund. So it's MMT, the concepts of MMT. And by the way, just as a side story, yesterday we found out the bond king, the former bond king, Bill Gross, retired. Bill Gross retired after a number of years of very bad performance. Now, I saw this coming right after the great financial crash when the Fed started to engage in all of its extraordinary monetary operations. Bill Gross, he was lost. He did not understand how the monetary system functions. He was not an adherent of MMT. And I remember back in 2011 when he infamously tweeted, "Who's going to buy them now?" And he was referring to the Fed at that time was ending one of its quantitative easing programs. And Gross was thinking, well, nobody's going to be able to buy a bond. If the Fed's not buying it, who's going to buy it? He did not understand. And here was the supposed or the proclaimed bond king who didn't understand that the money, the dollars to buy treasuries come from government spending itself. The government spends, those dollars pile up as reserves in the banking system, and those reserves are swapped for treasuries. And as a matter of fact, the sale of treasuries is really only functions as a reserve drain. That's it. You got to fill something up before you can drain it. So the spending puts the dollars into the banking system, and those dollars at the time, which were yielding zero, are swapped for treasury. That's why there's never an issue with who's going to buy them. He did not understand that. And there was a lot more he did not understand. He was also one of these guys who thought that QE was going to cause hyperinflation and the dollar to collapse. Of course, I said the opposite. I made my video in 2009 saying the dollar was going to go on a long-term uptrend because of QE. So the bond king, he's gone. And this is what happens when you don't have the proper understanding. And I have to say that I took some of his money. And those who followed me took some of his money. Now, all during the month of December, I was telling you in daily videos, you got to buy this stock market correction. It was ridiculous. Everybody was going crazy over a 2.5% interest rate, thinking it was going to create the second Great Depression. I was saying that. I had subscribers who panicked and freaked out and crying like little babies. Oh my, you said to buy the dip and it went down a little bit more after that. We don't try, this pursuit of some kind of perfection in the timing and the price. That is a futile endeavor. You have a macro view based on the proper understanding of policy and the economy and the monetary system. You buy when it goes down, you sell when it becomes overvalued. You cannot be absolutely this quest for absolute precision. It is a destroyer of results. It is not a creator of results. This is again people who are trying to lean on some kind of system. They need something to make them feel like there's no uncertainty, but that is not a valid, that is not a logical thing that you should be after. It's not a rational thing that you should be after. In my approach, I take that out. That concern is taken out. It's all about mental gain. And by the way, the ones who stayed and the ones who faced the discomfort and the adversity and the stress of it and came out, they came out stronger. They came out more resilient. They came out with the ability now to face events like what we have been through. And I don't care if you're talking about trading. I don't care if you're talking about something of a physical nature. I don't care if you're talking about something of a personal, emotional nature. Life is full of periods of disappointment and hardship. And if you cannot handle that, you're just going to break down. And you're certainly not going to achieve the success that you're after. It's all about facing the discomfort and getting through it. It's all about rising above adversity. Because that's just a part of life. So, market's going higher as I said it would. We're going to make new all-time highs a lot quicker than most people think. I think there's still a level of skepticism on this rally. It is going up. Fiscal flows are back very, very strong. Bank credit growing very, very rapidly. All the things I talked about in November and December, all happening. A lot of people bailed out on me, but I have people who stayed. And I'm sure they're happy they stayed. Not just happy, but I'm sure they feel as if they surmounted a personal challenge within themselves. Put themselves, the trial by fire, put themselves through it and came out stronger and more resilient as a result. Those are the kind of people I want. Those are the kind of people who are going to make it. The others who are on the never-ending quest for the system fairy, looking for that thing that's going to take them there without any discomfort or without any stress or hardship or adversity, that's a fantasy. That's a fantasy. All right, everybody. Everything's good. Market's going up. It's all moving in the direction that I said. Stay strong. Go get my report. Get the 30-day free trial now. Lock in your rate at $195 a month because March 1st it's going up to $250 a month. See everybody. Bye.